My name is Carlo Rossotto. I'm head of TMT Upstream at the IFC. I'm very happy to participate in the TowerXchange's Meetup Asia 2021. And today we're going to talk about the global platform of the IFC on small cell and distributed antenna systems. We have launched this platform with the objective to fund small cell and DAS deployments in emerging markets. To do so, we have partnered with two consulting firms, Axon Partners and Real Wireless, to launch this platform. And we have commissioned a comprehensive study that will be discussed today. Our work, IFC Upstream, consists of pre-investment work that lays the foundations for future transactions, the risks, future investment, and often we do so in collaboration with the World Bank. We are part of the World Bank group. IFC provides technical assistance, capacity building for private sector companies, for institutions. We support private sector clients and governments, and our services complement the other transaction and advisory business of the IFC to unlock new investment opportunities. We intervene when we have a line of sight investment. We are investment oriented. We support those activities that are key to enable a specific identified investment to take place in emerging markets. And our team deals with telecom, media, and technology. So we have launched several new global platforms. This is one of them to support TMT verticals. So we have launched these platforms for small cell and distributed antenna systems. We have another one for satellite, another one for rural connectivity, another one for cloud and data infrastructure, for example. So over the last few months, we have been working with the Axon Partners and Real Wireless for this study. And the objectives have been to first estimate the size of the small cell DAS market, the opportunities for growth. We want to look at the key drivers and the challenges to develop small cell and DAS in emerging markets. And in doing so, to identify those business models that stand a greater chance of being scaled up, replicable, to be developed, and to quickly reach a size that is interesting for the investors. You will hear the colleagues talk about a comprehensive investment analysis framework that can be used to assess the different opportunities. We look at specific investable opportunities in this space. And we thank the organizers for this opportunity to disseminate the study. So in the next few slides, you will see our partners walking us through a comprehensive presentation. We start with the use of small cell and DAS to go through the urban capacity, the indoor coverage, the more IoT and industry-driven cases, and rural. Then they will look at market dynamics, and we see that in the next 5 years, there will be substantially a doubling of the size of this market, driven primarily by enterprise and in building requirements. So this will help us with a bottom-up build of the size of the market opportunity. And by 2026, we believe that the market value can reach up to $17 billion, with Asia, with the $8 billion being the dominant region in this deployment. And then the presentation will really focus a lot on the drivers and challenges across 3 cases that are urban densification, indoor coverage, and private networks. And then our colleagues will highlight the elements of the investment framework, the investment thesis, and the approach to consider investment opportunities in this space. Thank you very much.
I'm Vasilis Kyriakopoulos, and I'm investment officer at IFC. Today, we're going to talk about IFC's pre-investment works that lays the foundation for future transactions, often in collaboration with the World Bank. This is IFC Upstream. We launched this platform with the aim of finding opportunities to fund small cells and DAS deployments in developing countries. We have partnered with Axon partners and Real Wireless in launching this platform and have commissioned a comprehensive study to them. IFC efforts on the upstream side include technical assistance, capacity building for institutions and private companies, and support to clients and governments. It complements the existing business of IFC, which is traditional financing, either in a loan or equity, and unlocks new investment opportunities. We have launched these new platforms and stand ready to support investment in these subsectors of TMT, including small cells and DAS, across geographies in emerging markets, but also rural connectivity, ESCOs for telecoms and others. We're looking to partner with the private sector, tower host, and neutral host.
Hello, I'm Julius Robson. I work with Real Wireless. I've been working with small cells technology for almost a decade, from starting in 3GPP through to the NGM Alliance and Small Cell Forum. And today I'm going to talk to you about some of the ways in which small cells are being used and how we understand different ways that they're being used and the business models behind them. So essentially, small cells are augmenting and providing localized enhancement to macrocell networks. And there are 4 key ways in which they do that. I showed on this screen. So urban capacity is where small cells are deployed on lampposts. Indoor coverage is to reach indoors, particularly where macro signals don't get through metallized glass. Rural coverage, where the cost doesn't add up to deploy macro sites in rural areas. And also, and predominantly in private networks supporting industrial IoT and a range of applications. So just some more detail on those. We can see examples where small cells are being deployed in the cityscape, in urban environments there. And that's our use case 1. So throughout this presentation, we'll be referring to these 3 main use cases, which are urban densification, indoor coverage, and private networks. The rural one is part of a different study, which we'll be talking about further today. So there you say, in urban environments, it's about using street furniture and sides of buildings to augment the macro cell coverage and bring extra capacity. For indoor, there's often the case where we need multi-operator indoor to make sure everyone can use their phones in building areas, or in train stations and stadiums, but also enterprise buildings too. And thirdly, in private networks, where a particular enterprise or industry will want connectivity for their own needs, which could be for their staff or for their visitors, but it also could be for the Internet of Things, automation and that sort of thing. So those are the 3 use cases. And on the next slide, I'll give some examples of the different use cases. So these are real world examples that have happened. We've got the main one here, which is for urban densification. This is where a connective carnival in Rio the capacity was augmented of a network by adding Nokia FlexiZone small cells, supporting a very large number of people over a particular event. But there are many other examples which I'm showing here on the right. So in Rio, we've seen the use of bus stops to augment capacity. In Jammen, there was a marathon that needed extra capacity. Philadelphia used small cells deployed particularly to improve the capacity for the visit by the Pope. In London, there's also cells and small cells deployed even under the streets in Switzerland there. So you can see a range, and there are many, many more examples of how small cells have been used in urban environments like this. So to get a sense of what use case 2, the multi-indoor coverage, it's all about getting connectivity into buildings and supporting mobile operation networks there. So our key example here in Latin America has been in the Consterna building to really get that signal. And one of the things that blocks the outdoor signal is this metallized glass that you can see on this building here. So many modern buildings do need to have their own dedicated indoor systems. So that's an example, but there's other examples. That was a shopping center, but this corporate campuses are another good example of where single operator coverage can be really useful. Hotels and malls, always important. Airports are typically lead use case where the value is very high for that connectivity. So it's it's really important to make sure that people arriving into the country can connect to mobile networks straight away. Stadiums, another common one where the value is very high, lots and lots of people, lots of capacity needed. And yeah, trade shows as well. Venues in general are where multi-operator capacity and coverage are needed for indoor space. So, and the third use case, which is private networks. You don't hear so much about this, but actually, as we will see in the next slot, it's one of the largest sectors of deployment for small cells globally. And this is where we're using cellular technologies, but to deliver industrial and enterprise connectivity. So IoT, Internet of Things connectivity is a key driver for some of these networks. And here's an example of how a port has been used, has been the application for one of these networks, where the value of keeping everything running and everything connected and automated is very, very high. So, cellular networks are extremely reliable and resilient, providing that value there. And there's also other applications of verticals of public safety in hospitals, lots of work in the in utility sectors like oil and energy, for tactical use as well. And also, again, in venues, private networks can make sense to support staff, but also to provide guest connectivity as well. So there's 3 use cases which will become the foundation for the rest of this study, which we'll be talking about now. And what we're going to hear about next is the relative size of the global markets for each one of these use cases. And I'll hand over to Caroline to talk about that.
Yes, thanks, Julius. I'm Caroline Gabriel. I was a consultant to Real Wireless on this project. I'm also the co-founder of Rethink Technology Research. We produce an annual forecast of small cell deployments in various markets and scenarios. It's based on a whole range of inputs, but most importantly, a survey of about 130 deployers of small cells, which include mobile operators and other types of deployers, such as private network operators and neutral hosts. And we'll hear some more about those throughout the presentation. Just to give you a few sort of summaries of the results of the most recent forecasts that we worked on for this project. This one shows global deployments of small cells, and this is units, so radio units attached to small cells. We'll see revenues later on. Going up to 2026, you can see it starts from 2015. It's been quite a modest market in the late 2010s, but from sort of last year onwards, we've seen pretty steady growth. This has been very much initially driven by developed economies. You can see that the sort of orange shaped bar, which is East Asia and Pacific, dominates the early deployments. Still very important by the middle of the decade, but as a percentage slightly less so. China, Japan and South Korea, along with the United States, have been the markets that have really put a lot of scale into small cells in all the scenarios that we see. But emerging economies, which are more of our focus today, are certainly gathering pace through the 2020s, particularly often to support national industrial plans and an attempt to build up key industries such as manufacturing. We're seeing that a lot in some of the less developed economies of Asia, and from 2022 onwards, a very significant growth coming from South Asia, particularly India. As well as looking at it regionally, we also look at the forecast by the scenarios and use cases that Julius showed us just now. And so here you can see the same forecast over the same period, but split by those use cases. Rural and remote is included here. Although small cells are important to rural coverage, they were out of scope for this particular study, and as a percentage of total numbers, of course, they're relatively small. So you can see that the main volumes and drive are coming from private networks, the dark blue section, and also from the urban densification. For this particular study, we were focused primarily on the indoor and the private and enterprise small cells, And we've seen in the early years of small cells that the enterprise requirements really have been the main driver of deployment, but also the main driver affecting the whole ecosystem and what they've been developing. Urban deployments have been fairly slow to date. There are quite a lot of reasons for that. A lot of them are practical, to do with regulatory barriers to accessing sites, large numbers of sites in the middle of cities, for instance. But on the enterprise side, those barriers are lower, and there's been more pent-up demand for companies, particularly large industries, to initially to improve indoor coverage. That was the first driver, just to be able to make reliable calls and data exchanges deep within buildings. But we're starting to see a much higher growth rate coming from the early 2020s. And that's coming from perhaps more advanced enterprise requirements. So beyond just getting decent coverage, companies are starting to look at 5G. They're starting to think about applications such as robotics, augmented reality for training, digital twins. Lots of these quite buzzed up applications that we hear a lot about in connection to 5G are becoming extremely real in terms of what enterprises see the opportunity to deploy. And of course, that needs a whole new level of coverage and density and reliability throughout an enterprise environment, whether that's purely indoors or whether it's an indoor-outdoor sort of campus scenario. So we're starting to see a real uptick in growth triggered. The problem has been that the business case is not always particularly easy for a mobile operator. Mobile operators have done a lot of the work of taking coverage into what we call carpeted environments, office blocks and so on. But once they start looking at industrial environments and locations, it can be quite a fragmented business model for companies that are used to building one huge nationwide network that can be used by everybody. Once we start to look at these far more specialized networks, there are different stakeholders, different connectivity requirements, and so on. So we've started to see the emergence of different types of deployers who are more specialized onto enterprise networks. And these, in our view, are going to be the single most important driver of deployment of small cells in the indoor and enterprise scenarios, and therefore of the kind of numbers that you can see on this chart. So here a little more about who are these deployers. As we said, indoor networks in the enterprise, they do require a diversity of deployers. One enterprise or one sector may, for instance, prioritize applications that need extremely high capacity, that need particularly advanced security, that need extremely low latency. Every physical environment is different and has its own challenges. And there are many other stakeholders involved. There are application developers, there are integrators, there's a lot of other equipment, including specialized networks to be integrated. So among this, it's no surprise that these very diverse set of requirements will not all be met by a single type of deployer. So the M&As become just one among the group of deployers, and in many cases, they will cooperate with some of the alternative companies. And you can see the different types of deployers summarized in the graph on the right. So this is the same forecast again in terms of the units, but this is focused down on the enterprise small cells. And you can see that they break into these different deployment categories as time goes on. So the public MNO network is still supporting quite a large number of enterprise use cases. And there are also MNOs that will set up a specific separate division to deploy private and enterprise networks. But we are also seeing specialized private network operators, or PNOs, and they may both deploy the network and manage it going forward, or they may deploy it and then the enterprise and its IT department may take it over and manage it themselves. And another very important group, the one in green, is an enterprise-focused neutral host. and obviously particularly of interest for this event. We're seeing a lot of neutral hosts who have mainly focused on passive infrastructure and often for macro networks, starting to see the opportunity to take those shared multi-operator business models into the enterprise environment. And we're also seeing specialized and startup companies also coming into particular verticals and industries with a neutral host platform that they can then support multiple service providers, including the MNOs themselves, but also other service partners that the enterprise and industry may work with. So you can sort of wonder why these are suddenly all emerging now and haven't been seen to nearly the same extent a few years ago. Part of it, as we've said, is pent-up demand and is industry starting to get much more serious and advanced in what they want to do with cellular connectivity. But also there have been a lot of enablers that have come into place. For instance, shared spectrum is a very important enabler that means that private network operators or neutral hosts can access spectrum without having to lease it from an MNO. There are new small cell architectures evolving, which really make it much easier for multiple service providers to share a network in a flexible way, virtualized RANs and open RANs, for instance. There's also, rather importantly, been a rising willingness by enterprises to contribute to the funding of these networks, which in the past has often been quite a significant barrier, that they have just expected the connectivity to be deployed. As it becomes more strategic to them, they're more willing to consider shared investment with the service providers or the neutral hosts. We saw a couple of slides ago that the urban capacity case is also rising quite significantly, although we do not expect it ever to overtake enterprise and indoor in terms of the numbers of small cells, because of the sheer number and diversity of enterprises and industries that will look to use cellular connectivity. But there are other reasons why it's harder to forecast the urban capacity case. It is somewhat, it's more focused on the MNOs. There are alternative deployers of urban public networks, and some of the big tower operators are becoming quite active in that area. And we've seen companies like E.co making very interesting comments about this case. But generally, it remains heavily dominated by the mobile network operators. And they will tend only to go for significant levels of urban densification if they lack spectrum to add capacity to their macro networks. Their sort of deployment models and the sort of equipment that they're used to deploying and managing are very much focused on these bigger cells. We do think the urban small cells will grow. They've historically been less than 20% of the total deployed in any year. We think they'll get over 30% of the total in 2026. But as you can see on the graph, there's quite a big gap between what we forecast as the best case and the worst case in urban, a 54% difference. That reflects the many uncertainties in this market. The enterprise one is a lot easier to predict. It's a lot more solid in the assumptions that we can make. And also a lot of the volumes in urban densification are concentrated in fewer countries. So China has some very, very big smart city programs, which make the growth look very high just on their own, but doesn't mean that progress is being made on an international basis. And generally, and we've seen this a lot in Europe, as operators are being allocated more spectrum capacity, typically mid-band spectrum for 5G, they're using new antenna technologies to be able to use that spectrum as efficiently as possible to densify and extend the range of their macro cells. And only when that starts to run out will they spend a great deal of money on urban densification. So currently this is the reason why we are seeing most of the growth in the period of this study being driven by alternative deployers, by neutral hosts, and by enterprise and indoor scenarios. And with that, I'm going to pass over to Victor.
So thank you very much, Caroline, and hello, everyone. My name is Victor Martinez, Senior Associate at Axon Partners Group, and I'm going to walk you through the market opportunity assessment that we perform in this project to understand the volume of small cells and DAS deployed, both at a global scale and the regional level. So if we look at global figures, it is estimated that by 2026, around 41 million small cells and DAS units will have been deployed with a market value of roughly $17 billion. This 41 million is a cumulative number and represents that of a base case scenario, which is the most likely to occur. Still, as my colleague Caroline pointed out, we also consider two other scenarios, the worst case and the best case, to account for potential variations. And there are several factors which affect these variations, such as the maturity of 5G platforms, the potential impact of the COVID-19 pandemic, or the maturity in industrial and IoT business models. The best case scenario gives roughly 10 million more deployment than the base case, and worst gives 5 million less. So in the end of the day, there is a window of 15 million of small cells that might be deployed worldwide or not, depending on the factors mentioned earlier and on many others. So all these deployments are divided by the environment Caroline mentioned, which are enterprise, urban, and rural, and also by small cell types, covering microcells, picocells, and femtocells. And we do this distinction to be able to assign costs of equipment to each type of cell deployed in any given environment. And by assigning these specific costs and also taking into account major CapEx and OpEx items associated to small cell deployment projects, we obtain a monetary market size that ranges from $14 to $23 billion worldwide. So when we look at the regional numbers, based on the base case assumptions, we see that all regions will experience a substantial growth in terms of annual monetary value. I wanted to remark that these regions are defined internally by the IFC and are comprised of potential investable countries in North America, Latin America and Caribbean, Europe and Central Asia, South Asia, East Asia Pacific, Middle East and North Africa, and Sub-Saharan Africa, respectively. What we found is that East Asia Pacific will dominate the market by topping $4.5 billion of investments in 2026, followed by North America and by Europe and Central Asia. And these three will become the top three regions driving investments into this ecosystem in the coming years. If we take a closer look at Asia as a whole, it is and will continue to be one of the key leading regions in small cells and DAS deployments and investments. We will see clearly four countries leading the charge in this side of the world, which are China, Japan, South Korea, and India, all of them growing at double-digit number year after year. So if we saw in the global forecast that 41 million small cells will be deployed worldwide by 2026, 23 million of those belong to Asia alone, which is more than 50% share. If we translate this into numbers, we have projected the market size to be $8 billion of investment by 2026, which started in 2019 and constitutes a consistent growth throughout the years of 15%. Something very notable that is a clear sign of the unstoppable potential of the region. Based on these findings, Asia is definitely grabbing a lot of attention due to its dynamism and the presence of many investable opportunities in this space. So thank you. And now I'm handing over to my colleague, Oliver, who will cover the main drivers and challenges in the small cell ecosystem. Oli, the floor is yours.
Thank you, Victor. My name is Oliver Boshart. I'm the Chief Operating Officer at Real Wireless, and I'm as well a subject matter expert in the field of small cell DAS and as well repeaters, which is something I've been working on for the last 20 years, looking at indoor coverage, railway and tunnel coverage, and that lends itself quite conveniently to this study. To start with, I will talk to you about the drivers and challenges, which are the base of on the basis of these 3 use cases, but as well a little bit about the commercial challenge. So basically, who pays for it, and where the countries are in terms of acceptance of these use cases. So looking at the main drivers and key factors for all these use cases, we identified a driver for each use case as well as key factors, which help to understand where a specific country is in terms of readiness. So in terms of use case 1, we're looking here at the urban densification of outdoor network, which is the classic small cell at the lamppost. The driver here is the 4G or 5G capacity crunch, as Caroline mentioned earlier. This capacity crunch is usually caused by high demand that cannot be addressed by the macro cells. And this can be just because there are not enough macro cells and there is not enough permits for macro cells, or it can as well be because of spectrum shortage. Now, spectrum shortage in one way is driving urban small cells. However, so sometimes plans for small cells get delayed because more spectrum is being made available, which then pushes this small cell deployment out till this capacity constraint is a driving force again. Key factors to consider here are the facility and the ease of the installation of such small cells, which includes the infrastructure availability, but as well the approval process, which can be quite comprehensive and take a long time. Emission limits on output power on the small cells, which means that you're going to have smaller coverage areas. Backhaul challenges, so if there is not enough fiber available, that could be quite a high cost. However, in urban areas, typically you find quite a dense fiber network anyway. And then last but not least, somebody that actually wants to go for this use case and deliver it. So a tower co or a neutral host. In use case number 2, we're looking at indoor coverage, specifically multi-operator indoor coverage. Typically, this coverage will be delivered by a neutral host. And when I say neutral host, quite often they are a subset of a tower co. Now, indoor solution for multiple operators is starting to make sense when this coverage brings a tangible value. Now, tangible value can have different forms. So it could just be that there is not sufficient coverage inside the building or not enough capacity, but it could as well be that it's a coverage objective that brings prestige to the mobile network operator, and not being there would be a challenge. Or finally, for example, revenue generation, which could be an airport where the mobile operators can capture roaming traffic from people coming into the country. The key factors here is the acceptance of the indoor model. And on one side, you have the regulator that has to allow the deployment of shared networks and shared active infrastructure, but it requires as well the MNO acceptance. And sometimes the mobile operators are not ready for it yet, even if the regulatory regime allows this to happen. And that's where the IFC and TowerCos, for example, could work together to kind of move these things a bit forward. Then we have the presence of the neutral host and TowerCos in the market that are willing to deploy such models, that are as well willing to deploy the money and take care of the CapEx. But finally, you need as well to have somebody that wants to pay for this solution. And they're going to speak about that a bit on the next slide. Use case number 3 is very much about private networks. Private networks is a bit different to the other use cases because it's independent of the mobile operators. So this use case can happen in any country, independent of the maturity of the market, because what's driving here is really the maturity of the private or the government or public sector organizations. So if you have a car manufacturing plant that has a tangible value from a private networks, which is far better and exceeding what you could get from a mobile operator network because they can control it, for example, then this use case can actually fly. But there is a big yes/no decision to be made. You need to have access to spectrum, license shared access spectrum, for example, which is available in, for example, the US under the name of CBRS, but as well in many other countries. And for this use case to work, you want to have as well the skills and the capital that goes into these networks. Now, that's again where a TowerCo or a neutral host could become a private network operator and tackle these use cases and make money from it. So we looked at the drivers and enablers, the key factors before, but at the end of the day, somebody has to pay for it. And I wanted to illustrate that specifically on use case number 2, which is the indoor multi-operator neutral host solution. Because it's a little bit different to use case 1, but typically the mobile operator will pay your use case 3 private networks, where a private party will pay. Here it varies. It varies based on country and the perception and the willingness to pay by mobile network operators, but as well the willingness by landlords. It varies as well based on the venue type. So what is always going to be common is that the neutral operators the neutral host will pay for the technology and the platform. He will buy the distributed antenna systems or the small cells. He will be the system integrator and deliver a solution and operate it as well. The mobile operator will bring base station, backhaul, and its spectrum to allow the service to run over the platform from the neutral host. And the landlord will provide the infrastructure. That could be a BTS hotel, electricity, trunks and cable trays, but as well locations for antennas to be mounted. Now, the beneficiary typically are the users at the end, and they would typically pay the mobile network operator. Now, here comes the challenge. In some countries with flat data plans and unlimited minutes and data, there is no incremental ARPU by delivering a neutral host solution. So that's where the money flow can change. So in an airport, a mobile operator can see the benefit, or in a stadium, the national stadium, for example, that's where they want to have coverage because it has something to do with their brand value. And in this case, the mobile operator would actually pay the neutral host or contribute to the cost for a neutral host to deploy such a solution. However, if you have then a building in the city that has a number of office workers, they want coverage, but it might not be sufficiently attractive to the mobile network operator to deploy a solution because they're quite costly and it's not a core focus of their business. And that's where we can see in developed countries, landlord to become increasingly willing to pay for such solutions because it's seen as a third utility and a basic need, and it helps them to rent office space. So that's where landlords start to pay the neutral host for such a solution to be deployed. In some cases, the neutral host then even pays the mobile network operator to deploy the base stations and for the backhaul. So depending on country and maturity, these can change a lot. Speaking about maturity of the countries, I want to talk quickly about the readiness of a country for hosted and shared infrastructure. So on one end, we have the startup phase, which we found, for example, in Northern African countries, where the mobile operators are still delivering their own networks. They don't share any towers. There are hardly or no tower cores or neutral hosts in the market, and there are hardly any DAS or small cell deployments. On the other end of the scale, we have mature markets, where you have lots of tower cores and neutral hosts. It's very accepted to share. And yeah, there is a high deployment of small cell and DASs, for example, the UK or the USA. Now, it's important to understand where these countries are, to understand as well where the IFC or a neutral host actually wants to invest and start to lobby to edge this country along this process into the higher phases to allow these use cases to work and to fly. So from all the countries that we analyzed and all the interviews that we did, we just want to highlight a few key findings of the best examples per use case. We looked at Brazil and other countries for the urban densification, but we found that Brazil has a very supportive site approval and planning permit process, which allows the deployment of small cells quite easily, as long as if stick to certain requirements. So that makes a huge difference for the success of this use case. In Poland, active infrastructure sharing is happening, and the multi-operator core network approach is highly supported, and mobile operators are actually willing to go down this route. So that's quite a progressive market. So giving that indoor solutions and shared indoor solutions shouldn't really be a problem. For the use case 3, in terms of private networks, we said before that you need to have license shared access spectrum, which you have in Germany. But Germany, being a giant in terms of manufacturing, was quite progressive in issuing license for private networks to support Industry 4.0, and issued in excess of 100 licenses already by summer this year. So with that, I'm at the end of my slides, and I would like to hand over to Alvaro.
Thank you, Oli, and hello, everyone. My name is Alvaro Neira, and I'm Principal Consultant at Axon Partners Group, where I have advised telcos, ICT players, and public bodies in several topics, including business strategy, financial planning, and public policies. As my colleagues have outlined in the previous sections, the small cells and data space is a very complex environment with the presence of multiple use cases, business models, and very different types of stakeholders. In this context, the identification and assessment of investment opportunities requires to have a very robust investment analysis framework in place. Although such a framework can be tailored to very specific needs in the context of this project and this platform, and given the big interest of IFC in pursuing investment opportunities in this ecosystem, we have created a very pragmatic framework. I'd like now to share with you some of its most important features. So essentially, this framework is composed of 2 separate stages. The first one aims to identify areas of action that can be taken, in this case by IFC, to spot investment opportunities or to foster an enabling ecosystem for investment. Then the second stage aims to generate a checklist-based framework to assess actual investable opportunities. And in principle, this stage intends to be used prior to undertaking a formal financial assessment or due diligence process. So digging into stage 1, we have proposed the analysis of 3 interconnected layers. So in the first layer, we assess the overall maturity of the small cells and DAS market. The stage of the country among these maturity stages will provide indications on where the country and the market is currently standing and how it's expected to evolve in the following years. In the second layer, though, we assess the small cell ecosystem for its use case in particular, and we assess a number of factors in order to evaluate the extent to which the drivers and barriers can generate tangible investable opportunities in the country. Then, based on the outcomes of these first 2 layers, the third one aims to identify the areas of opportunity that can be taken. As I mentioned before, these can be either investable opportunities, for instance, projects, companies, or partnerships in this space, or actions to enhance the investment readiness of the market. For instance, promote public policy initiatives to promote the development of this market, some of which can go along the best practices outlined by Oliver in the previous section. So before moving to stage number 2, I would like to say a few words about the layer 1, which is about, as I mentioned before, the maturity stage of the country. So it's crucial for any investment officers to understand the main dynamics of the market and their analysis. So in general, any country or market can be categorized under one of these stages. So in the startup phase, MNOs are potentially the only stakeholder in this space. The thing is, small cells are not likely to be a priority for them, as they are mostly focused on coverage and macro deployments throughout the country. So investment opportunities will be difficult to find, and action should be focused on addressing the barriers and make the market more attractive from an investment point of view. In the growth phase, in addition to the MNOs, the portfolio of potential investment recipients can be extended to neutral hosts or tower costs, as their model is gaining more and more acceptance. On one hand, traction in urban densification will mainly depend on the existing and future spectrum holdings, capacity challenges, and regulatory conditions in the market. On the other hand, in building solutions and private networks can gain some traction, but most likely opportunistically and focus on tier 1 venues like airports or stadiums. Then in the expansion phase, the small cells and DAS ecosystem will gain more and more traction with more players stepping in across the value chain, supported by infrastructure sharing mechanisms. As the market and number of players grow, more investable opportunities will arise. So in this case, urban densification can gain scalability to other urban areas, also driven by the larger presence of tower costs. And then on the other hand, the opportunity for in-building solutions and private networks to address tier 2 venues can grow, mostly driven by larger presence of neutral hosts in the market. And finally, the maturity stage is characterized by full flexibility for different types of players to provide services across the entire value chain. There will be in this stage consistent growth of volume and opportunities across the different use cases, and higher levels of competition within the different stakeholders for selling opportunities. And finally, connectivity as a service and network as a service models will gain more traction and market acceptance in the country. So moving now to stage number 2, this stage aims to provide investment officers with a checklist-based framework to assess actual investable opportunities. When identifying a potential investment opportunity in a particular company or project, given the large number of variables involved, we propose to follow a top-down approach that covers essential business fundamentals to decide whether to move on to the financial assessment or due diligence process. So accordingly, we have defined 4 pillars. The first one revolves around the identification of the use case and business model, including the stakeholders involved in the value chain, the needs and barriers of such a model, the company positioning within the market, and the track record of this company. Also, we plan to analyze, or we propose to analyze the competitive environment in the market and the product market fit of the company. Then the second pillar analyzes the revenues and costs associated to the project from a unitary point of view. So in other words, if the business model makes sense from the unit point of view of a single project. So this effectively revolves around the understanding of the relationships between investments needed, revenue, CapEx, and operational costs. Then the third pillar focuses on the scalability of the project and whether this single project analyzed in the previous pillar is likely to scale or not in the market. And finally, the fourth pillar analyzes the execution plan of the company or project, including the existing assets, the different funding needs, and the success and risk factors. I would like to finish by saying that what I just presented is a high-level overview of this framework. And I'd like to highlight again the importance of having this type of methodologies in place to properly evaluate the different investment opportunities in this space. I'll now hand over to Carlo for the closing remarks. Thank you.
Thank you very much for being here with us today. We had the opportunity to hear the global platform on small cell and DAS, the main takeaways from the study that our partners have developed. We think it's a great opportunity. We have looked at different use cases, at the triggers, the market dynamics, the sizing of this opportunity, and what could be the basis of an investment framework. And now it's up to us to put it in action. And we think that this opportunity will unlock a lot of investment partnerships between industry, finance, sometimes governments, and we look forward to the development of small cell and DAS in emerging markets. Thank you.